So, welcome back, dear friends and others on this channel. Um, we are still talking a bit about withdrawals. And just to give you the overview, we are here at the moment. So, let's talk a bit still about the private use of a car. We have already made some remarks on that. Just to deepen that a bit. Again, a reminder, the most famous case for a withdrawal of a service, that's using a business car for private purposes. Here, however, there are two different cases clearly to distinguish. First, if the private use of a business car is done by the owner of the enterprise or closely related person or something, or by an employee, because these things sound similar. However, they are, when you go and take a look at the details, they are completely different. So, seems to be similar, however, completely different tracks to the solution. Let's begin first with the private use of the entrepreneur. No, by the entrepreneur, not of the entrepreneur, would be a bit strange. The testing scheme would bring us the following solution. First, taxability has to be thought about. It is not a genuine service if I drive my own car, so it has to be deemed to be a service under 399A. Use of an asset of the enterprise for private or non-entrepreneurial purposes. Then it's not for consideration because I can't pay money to myself, so it's also deemed to be for consideration. And the place of service has to be determined according to the usual rules. 3A1 is the basic rule because I myself, as a non-entrepreneur, am not, my private sphere is not a business customer. So only 3A1 remains as basic rule, and there is no special rule for using my own car. There is a special rule for letting a car for rent in the long run or for long term. However, letting for rent requires that I give it to somebody else according to jurisdiction. So that can't apply here. That is secure standing jurisdiction. So we end up with 3A1. So the place of the service is usually the place where the firm has been established. That's in the inland, so it will be taxable. Tax exemption, there is none in all probability because we can't imagine anyone. So tax base is the next step. There we don't have a consideration, don't have a real payment, so we have to turn to the fictitious tax base, the minimum tax base of 10.4. Here for services, an extra formula has been added. Number 2, those expenses which have entitled to input tax deduction. Reason is there can be no payment, so we have to take to refuge to 10.4. And now the question is, how do we get these expenses which are caused by the private use of the car? Here you can either make a cost calculation based on exact data, or you can just take refuge to an estimate. And so here the solution splits into two potential ways to get the tax base. First, if you do the exact cost calculation, you sum up all the costs of that car which have entitled to input tax deduction. Then you divide by all kilometers which were driven, then you have the relevant costs per kilometer. And then naturally, third step, how many private kilometers have you driven with the car? So you get that and you get a result. And as you calculate the whole thing with net, with costs, so with net values, then you have net costs as basis, or you have directly a net result. So our tax base. If, however, you have to estimate the stuff because you have no precise proof how much private kilometers you had, or you don't have the exact list of the cost of this car available, then you need an estimate. Now, in German law, there is an estimate for the Teilwert of the use of a private car, so of the withdrawal of private kilometers per month. That is 1%. However, the 1% of the gross list price of the car per month in the moment when it was first registered. However, the Teilwert of a withdrawal is the total of all costs of the withdrawal. And so 1% of the gross list price is under the Income Tax Act the estimate for all costs related to these privately driven kilometers. Now, VAT law, look on the previous slide again, says we don't need all costs, we need less. We need only those costs which entitle to input tax deduction. So whatever we estimate, it must be less than the 1% per month. And here the Fiscal Administration of Germany just says, okay, we estimate that this difference is 20%. If you now argue, well, I think the difference is higher, then they say, well, can you prove it? Do you have an exact cost calculation? You don't have. So it's us who estimate here what happened. You don't supply us with exact data, so we have to guess what is plausible, and we guess the difference is 20%, and you can't disprove that, so it's 20%. In that case, again, the result of your calculation is a net value, because here you also estimated costs. 6.1 number 4 estimates all costs. Costs are usually a net value in an enterprise. So also this result after 20% reduction is still a net value. So you can directly apply the tax rate to the result. This is your tax base. In case that you would estimate a gross value, you would still have to split it up into the VAT share and the tax base amount. However, here not necessary. No? So if we think about an example, you imagine, please, that the owner of an enterprise has bought a new car for 40,000 plus VAT. That's 47,600. The official list price, however, is 55,000. You know, there is always an official list price. You go to a trader, you negotiate a discount. That was foreseeable. Everybody foresaw that already, so you feel nice. And the trader, when the producer published the official list price, everybody knew that nobody is going to pay that until the end of eternity. Everybody would get a discount. However, for tax purposes, this gross list price counts. So the costs for last year were 5,000 fuel, insurance 1,000, car tax 1,000, repairs 3,000 plus VAT. Total costs with input tax deduction have now to be computed. By the way, you probably now are going to stone me to death because a completely unrealistic overview of costs. I just wanted to have some nice assumptions. Naturally, that's not a realistic one. The fuel costs and so probably completely mad. I personally never drove a car of myself. So for me, it's a different world. So I just imagined and invented some figures. You know, the principle counts. Enjoy that I'm here completely far off the world. However, accept the numbers as given. We do as if that is the truth. And so let's calculate the cost of the privately driven kilometers which have entitled to input tax. First surprise, we take the depreciation because, well, the cost of acquisition of the car have entitled to input tax, so the depreciation entitled to input tax. Or depreciation reflects costs which entitle to input tax. And the depreciation period is the adjustment period under paragraph 15a for VAT purposes, so it's 5 years at maximum. The fuel cost was 5,000 net, the repairs 3,000 net, all in all is 16,000 net costs. Now let me go even more mad. The complete kilometers driven was 64,000. That means we end up with relevant costs per kilometer of 25 cents per kilometer. And if we had driven 12,000 private kilometers, then we end up in 3,000 euro relevant costs, which had entitled to input tax related to the privately driven kilometers. So there you would just add the 19% for the VAT and everything's fine. You know exactly how the withdrawal has to be tested. taxed. Sorry. The alternative method would be the 1% approach. So we begin with just estimating that 1% of the gross list price per month is the value of all costs. So 55,000 times 1% is 550 per month. 12 months are in a year, and if the car has been driven the complete year, we end up with 6,600 euro per year. Now the gross list price is the basis, that's gross. However, the 1% of the gross list price is an estimate for all the costs. So estimated is a net figure. So what comes out here is 1%, blah, blah, is a net figure. And that can be directly used as a tax base. Now you remember a bit ago, exact cost calculation was here far more exact, or far more positive, only half of the cost. So we would choose probably to take the cost calculation here. However, if it came out what is definitively very often more realistic, that the exact cost calculation leads to a higher result, then we would just throw our cost calculation away and choose the 1% method. So that's even legal. You have the free choice. Otherwise, if your data would not be sufficient for the exact cost calculation, and cost calculation would lead to a higher price, one could reproach you with tax fraud and things like that. No, you get a free choice. You can use that method, which is better. However, naturally, for the exact cost calculation method, the logbook method, or in German Fahrtenbuch Methode, you need to supply the exact cost of that car for those privately driven kilometers. So naturally, you need exact data about how many kilometers were driven by that car, how many kilometers were private, which costs refer to that car and not to other cars, and all that. And then it's fine. Now, if the fiscal administration finds a flaw in your cost calculation approach, then you end up with a 1% estimate. Now, just to shock you, completely different are things when an employee drives the car for private purposes, because then the steps to the solution look different. Let's begin with taxability. Here, the first difference is you don't need to assume that this is a service under 39A, because if I allow somebody else, I, the owner of the enterprise, allow an employee to drive my car, that is doing something for somebody else. That is, by definition, a genuine service, 39. Now, is it for consideration, or do I have to do as if it were? And the answer is, well, why do I allow my employee to drive my car after business hours? Well, the answer is because he renounces on demanding more wage in return for that. He works better, he works more. So he pays by additional work or better work. So it's a kind of barter trade. You do something for me, I do something for you. So the employee pays for this permission by better work, so by a part of his working time. So it's actually for consideration, and you don't have to do as if it were. The place of service now we let a car for rent to somebody else in all free hours which are not business hours. So it's a long-time contract, and there a special rule exists. The place of service is deemed to be the place where the employee lives. So everything's different here, completely in taxability. We end up, if we are lucky, and most we are, with taxability. Tax exemption, none. Tax rate, no, tax base, sorry, 10.1. Because, we always ask first, well, what we get in return minus the VAT amount included therein. And now we get something in return. We get working hours. We get working performance. And every time when you get something in return which has a market value, you have just to do as if you had got that market value in cash. Which means 10.1 is now our rule, not 10.4. We get paid with work. So we need to determine the market value of that work, and that is our gross revenue from the service, giving permission to drive the car. Now you have only one fascinating car left. Oh God, my God. It's part 90 of this series, and evidently my brain is as if I were 90. So 10.1. Your gross payment is the work you have to do. General principle, if you don't get cash, as if what you got were cash. So we have just to determine the cash value of the work in question. Now that's a challenge, okay? There is no God-given value for work. However, we can estimate again. First, we can base our estimate on two assumptions. The first assumption is based on the logbook method. The idea is, if your employer has to bear costs for the privately driven kilometers, then he would not bear these costs if your additional work was not worth at least these total of all costs. Huh? And for you, what you get and what you save, the value of what you get for your work is also exactly that, what you save as cost. So the idea is here probably the wage which you get, and that means the amount which your work is worth. That is the same as the gross costs of all the privately driven kilometers. The market value of the kilometers is a minimum for what your work must be worth. And the idea is, well, your employer is not a car trader and not a car rental enterprise, so probably he does not want to make a profit from that, so it's probably equal. At least it's a lower minimum value, so we can say sum up all costs of that car, gross costs, and not only those with input tax deduction, because imagine if your work is only worth 80% of all costs, then your employer would make a loss by the bargain. I give you the car and you pay by work. So your work must be worth all costs of that car, gross values, because market value is gross value. Now you divide by all kilometers driven and you get the relevant cost per kilometer. Now total cost. Now you multiply again with the amount of privately driven kilometers, and there you are. The result is, however, now an estimate for the gross price which your employee pays for the permission to drive the car. And as it is a gross price, you still have to split it up in a net amount and the tax part. The other alternative is the 1% method. Now you take an estimate of the Einkommensteuergesetz for the market value of your work in 8.2, sentence 2, and the next ones, the following ones in the Einkommensteuergesetz. That is now a gross value by definition, because the Income Tax Act estimates the gross value, the market value of your work. So 1% of the gross list price per month is the basis of the estimate. And now there is, in that particular context, there is an additional supplementary charge of 0.03% per kilometer of the gross list price per kilometer of the difference between residence and your first working place, or principal, most important working place, where you most often have to travel to. So a different formula, although it sounds similar. This time you estimate a market value that is a gross price. So this time the estimate founded on the 1%, although you got it already in another context differently. This time it's an estimate for a market price, and so for a gross price. So the result has to be split up again into a net value and a tax. So in both cases, the estimates are based on rules of the Einkommensteuergesetz. So here, the cost calculation follows the rule of the Einkommensteuergesetz. That means when it comes to the depreciation amounts, under the Einkommensteuergesetz, you have other useful life estimates than in the VAT Act. In the VAT Act, the useful life of a car is cut off after 5 years. In the Einkommensteuergesetz, you work with realistic estimates, and court decisions say for the purpose of exactly this calculation, you are not allowed to estimate the useful life so short as you usually would be allowed for balance sheet purposes. So here 8 years are tolerated as estimate for useful life for a car. That leads to the following example. Let's say we have an employee whom we gave permission to use a car for private purposes. Our boss bought the new car for 40,000, 47,600 gross price. Official list price was, however, 55,000, but lower cost of acquisition because usual discount. Employee now lives at a distance of 25 kilometers from his principal working place. Now what happens? The cost for last year were fuel, insurance, car tax, repairs, and so on. Total of costs which are relevant now for the employee calculation is all costs, so we don't leave out the insurance cost and the rest. So we have total of all costs 17,470. Kilometers driven again 64,000, just to make no difference here. Now we end up with relevant costs of 27 cents, 0.29. Privately driven kilometers shall again be 12,000. Now we end up with 3,275.62 euro, probably rounded up or down a bit. This is now, however, defined as a gross price, which your employee pays for the permission to drive the car. So you split it up into a net element, the tax base, and the tax 19%, here 522.99. The alternative would be the 1% method. 1% of gross list price per month, 550, times 12, 66. Now the additional charge for 0.03% of gross list price times the distance between residence and first working place, and another 330 per month, so 3,960 per month. You end up with a total of 10,560. That is again deemed to be a gross amount, so you split it up again and have again a net tax base and 19%. So again, what you see here is the two cases sound similar, however, completely different way to a solution when you look to the individual references and parts or paragraphs of the tax act which you have to use. Completely different methods how you calculate it in detail. Well, so when it comes to other withdrawals than merely the use of a good, in general, you must remember that there are two categories. First, using a good or an asset of the enterprise for private purposes. We talked about that. And then the second category, all other services. Whatever you use, whatever the enterprise does for you, if it is just a service, it classifies in the second category. German VAT makes that clear. The VAT Act makes a clear distinction. There is either the mere use of an asset for private purposes, 39A number 1, or all other services rendered by the enterprise to the owner or personnel also for free, number 2. You have the same distinction in the VAT directive, clearly made. Article 26 says there is to be treated as supply of service for consideration either A, the use of goods of the enterprise for something, or B, any other service carried out free of charge for the entrepreneur by the enterprise or for the staff or what else. Here the directive just says, okay, the member states can treat the problem differently. They might make exceptions here, provide that an exception does not really create a distortion of competition, so minor importance or other procedure, but mainly same result. Sometimes states do this, For example, there are member states which renounce on taxing the private use of a car and instead, with permission of the EU Commission, just eliminate the deduction of the input tax for a car to a certain extent. Why do we make these two categories? Well, the difference is the tax base is different. If you merely use an asset, then the tax base is only those costs or expenses which entitle to input tax. However, in case of any other service withdrawn from the enterprise, then the order of the law is take the sum of all costs. In German law, you find these two different tax bases defined in 10.4, minimum tax base, always applicable if 10.1 makes no sense. That's the case in case of withdrawal. So number 2 or number 3. The VAT directive does reflect this difference in the tax base far less clearly, because there the directive just says, well, in case of the withdrawal of services from the enterprise, the tax base is the full cost of the taxable person for providing the services. The juridical interpretation has, however, led to the consequence that if you withdraw the use of an asset for non-entrepreneurial purposes, that then only, as a parallel to that, only those parts of the good in case of a withdrawal classify for a withdrawal which led to input tax, that then also those costs which entitle to input tax only count for this period. But you see, the distinction for the tax base is not so clearly in the VAT directive, however, made by jurisdiction. So in cases where you have not only the mere use of an asset for, let's say, private purposes, but you use any other service provided by the enterprise for free, then you have to calculate all costs. Naturally, all costs also include depreciation costs. Depreciation is now, again, a VAT calculation. And so you will have to calculate the useful life again based on the VAT simplifications. There is, an adjustment period limited to, in Germany, 5 years for movable property or 10 years for immovable. And this will also be the basis for calculation the depreciation amount in case where you calculate the cost of a service. Probably if it's a building and you have to calculate also depreciation amounts, that can be a heavy blow. Well, what can be meant by this clause? Imagine you have personnel employed in your enterprise, let's say a gardener. Now you also have a private garden. So although your gardener is busy with mowing all the lawns and keeping in good shape all the parks of the enterprise, you ask him or her also to come to your private home and spend some 3 hours there in a month to keep your private garden in perfect shape. Now you withdraw services from the enterprise's gardener into your private sphere, so you have to pay VAT on that withdrawal of a service, and the tax base is all the costs, so the wage costs of the employee, the costs of raw material, the appropriate share and the depreciations of all the machines and tools which the gardener uses, and so on. So you end up with such a thing. Or you employ somebody in a firm and then just ask him to do also something for you, let's say to help with a private party or things like that. Every idea to which a mad brain might come. In those cases, the cost for these working hours will be the tax base for the withdrawal. In practice, very often people who know about these consequences will look for a different way. For example, when that is the gardener of your firm, You might say, okay, we employ you with a full-time contract for the enterprise. And then we employ you with the minimum job or with an extra contract. You get employed for doing the work for in my private garden, extra contract, extra payment, extra treatment, because then you don't withdraw these working hours and that work from the enterprise. Then you act insofar as a private person employing another person for private household work, which would then be treated differently. So the calculation would then be just what is more expensive, the one way or in the other. So you would then compare, and probably, or your tax advisor would compare and give you recommendations what is easier, less bureaucratic, or cheaper. Okay, that shall be enough for today again. So thank you for listening and hope to see you soon again on the channel. Goodbye, enjoy the rest of the day.